In this seminar, we will cover the question Palestine Limited. So if you look at the question, you can see that there are 6 months available here. So that's figures for October 2020 till March 2021, including sales, wages, overheads. In order to attract customers, Palestine Limited has a history of offering generous credit terms. Customers tend to settle their debts according to the following pattern. So 20% in the month of sale, so they pay, so 20% they received in the month of sale, 40% after 1 month, and 40% after 2 months. Okay, so first of all, we have here credit terms. We have trade receivables. So cash budget is concerned about when we are receiving the cash. We are not concerned about the trade receivables. We are not concerned about when we did sell. We are concerned about when we are going to receive the cash. Okay, now if you look at the question asks you to calculate, not to calculate actually, to prepare the cash budget from January 2021 to March 2021. So 3 months. So that January 2021, February and March. So first of all, the first workings we will look at is the sales. So right, let's have a look. Okay. If you look here, you will see that we have 3 months as we agreed. Okay. Right. We have 3 months as we agreed. That's right. Okay. Now my question is for January and February and March. Let's start with January. So for January, okay, according to the question, okay, if you go back to the question, it tells you that 20% in the current month, 40% go back 1 month, and 40% go back 2 months. Okay, let me show you. Okay, let's have a look. In January, 20%, or actually move back 2 months, so that's November, isn't it? So from November sales, 40% of November sales should be going to January. We are receiving it in January, right? Because according to the question, tells us that 40% of the sales is paid after 2 months. So if you look at January, November sales, this means 40% of November sales goes to January. True? 40% of November sales go to December, but we are not, is not related because we are doing January. And 20% of November sales goes to November. So here, what we are interested after 2 months in January, because we are preparing cash budget from January to March. So 40% of November sales goes to January, 40,000. So if you go back to the question, you'll see the total sales for November is 100,000. So as you see, so times 40%, so that's 40,000. Now for December, 40% of December sales goes to January. Yeah, can you see? That's 40% goes to January. And for December, 20% goes to December, we are not interested, and 40% goes after 2 months to February. Can you see what's going on? So that's 40% from December goes after 1 month, January we are receiving it, and 40% of December sales after 2 months, 40% we receive it in February. Yeah. Okay, dokie. Now, for January sales. January sales, 20% of January sales received in the current month, which is January. Can you see this is a 20% received in the current month, January? Because I mentioned we are interested from January to March. This is why we prepare a cash budget. So that's a £25,000. So 40% of January sales are received in February. So after 1 month. And 40% of January sales will be received in March after 2 months. Yeah. In terms of February, 20% of February sales, that goes to February, and 40% of February sales goes to March after 1 month. 40% goes to March. And 40% of February sales will be received in April. But again, we are not interested in April because we are preparing cash budget from January to March. For March, 20% received in the current month, which is March. Again, 40% of March received in April and 40% received in May. Again, we are not interested there. So far, these are the sales. If you add them up, you can find out for each month what is the total sales. Okay, I hope it's clear for this. Okay, let's carry on the question. Okay. Right. Purchases of materials are 40% of each month's sales, and they are paid for the month following the purchase. Right, what does that mean really? Okay, so first of all, you need to understand that the purchases is 40% of sales. So if you look at the sales here, right, you will see that the sales here, 40% of this number, it's the purchases. 40% of this month, if this number is the purchases, right? So that's the purchases. So that's absolutely fine, but here it tells us that the business paid the purchases, all of it, in the following month. So this means if they bought in December, they will pay the supplier in January. Okay, so let's have a look. If you look here for January, you will see that it's 40% of December sales, isn't it? Yeah. So if you look at December sales, it's 40% of December sales is £44,000. So £44,000 is the purchases for December, isn't it? That's £44,000 is the purchases for December. Okay, but when we are going to pay the supplier, we are going to pay it in January. So that's why £44,000. It's money out in January. In terms of February 2021, we are using the January sales. So if you look at January sales is £125,000. So 40% of £125,000 is £50,000. So £50,000 is the January sales. It's the 50,000 is the actual January purchases, not the sales. Yeah. So 50,000 is the January purchases. That's fine, no problem. Yeah. when did the company, or when the company are planning to pay this amount to the supplier? In February. So the February purchases would be £50,000. Let's do the March one. So if you look at the March, you will see that we are using February sales. So for 40% of February sales, £100,000, it's 56,000. So 56,000 is the purchases made in February. The purchases is made in February. That's fine. Right. These purchases, which were made in February, we will pay it to the supplier in March. And that's what we are going to expect the bank account in March to be less £56,000. So that's in March. So these are the purchases. So these are the two workings which you are concerned about. Other than you need to start preparing the cash budget, and you should be able to do it straight away. Let's have a look. So first of all, before we start preparing the cash budget, I'll show you first of all. So I'll show you something. These are the total collection sales. Can you see? The working one, we did it, guys. Where is it? Sorry. Yeah, this one, yeah. Yeah, can you see, guys? This is the one we calculated in W1, working one. So the total sales, because when you prepare a cash budget, you should be able to start with a cash collection or money inflow. And money inflow, that comes from the sales, and we calculated in working one. These are the final figures here. Okay. So let's carry on reading the question, because we haven't read it all, so we can find some information. Let's have a look. Wages and overhead. So we have here wages and overhead. If you look, these wages and overhead are paid in the month in which they are incurred. So there's no worries. Just copy paste the January, February figures, March figures, easy. A machine costing £50,000, right, is due to be purchased in February 2021. So we are going to expect in February that our cash or our bank balance to be less by £50,000. In order to fund this machine, so there is a £30,000 loan is to be taken out at the beginning of February. So at the beginning of February, so there is a loan. We as a business, they took a loan from the bank, £30,000. So what you're gonna expect in this case, you're gonna expect that the bank, the business bank, will go up by £30,000 in February because they have a bank loan. So we are expecting in this case that £30,000 in February. That's right. Yeah, that's correct actually. So there's a £30,000 here in February. That's from the loan. It's a money inflow. In this case, that's all. So if you do add them all together, so 109, this you add 30, 152,000 and 138,000, and these are the total cash inflow or total cash collections. Now when it comes to cash payments, so cash payments, you need to start with the purchases one in working two, the one we calculated in working two. Look, these are the purchases we calculated in working two, 44, 50, 56. Okay, just you copy paste them. Okay, now you need to list all the other payments or cash outflow. So of course you need to do the wages and overhead. So wages and overhead are cash outflow. The question tells you that they are paid in the month in which they are incurred. So in this case, in the current month. What does that mean? This means you just copy paste them and list them, wages and overheads. So they are not paying in the following month or after 2 months, it's just in the current month. So 10, 10, 10 and 17,500. Okay, let's have a look. Here we go. So that's 10, 10, 10, 17,500 each. Okay. So now for the machine, when we read the question, if you remember what we figured out here, that there is a machine, isn't it, that they are gonna pay a machine, and this will cost £50,000. And again, that's £50,000 should be reducing from the bank account. So as you see here, in February, you will see that the bank account is or will be reduced by £50,000 because of the machine. Now, for the bank loan, right? For the bank loan, there is an interest of £1.25% per month. So in this case, the interest is a part of expenses, and we need to add it under the cash payments. So what you need to do really, you need to multiply the £30,000, which is the loan they take it from the bank. If you multiply by 1.25%, you should be able to find the interest, which will be paid monthly to the bank. And the interest will start from February in this case. So that's £30,000 times 1.25% equal, I guess, 375, and that's 375 should start from February every month. So that's February and March are the 2 months concerned here. So if you look at the question, so there's nothing really left. We covered everything here. Only the opening cash balance in January 2021 is 3,500. Otherwise is all covered here, the opening balance here. So how to calculate the total payments? The total payments, you just need to add up all the figures here, the cash payments or cash outflow, so you can find out the total payments here. So do the total payments for January, February and March. Okay, lovely. So now how to calculate the net cash flow? Net cash flow equal total collection minus total payments. Again, total collections minus total payments equal net cash flow, £37,500. So net cash flow of £37,500, if you add up 3,500, which is the opening cash balance, this is in the question in January, opening cash balance in January, so equal the closing balance of £41,000. And the closing balance in January is the opening balance at the opening balance in February. So again, if you add the net cash flow plus the opening balance in February, that gives you the closing balance in February. And the closing balance in February is the opening balance in March. So if you add up the net cash flow plus the opening cash balance, so you should be able to find the net cash flow, or not, sorry, the closing balance at the end of March. Right? So to comment on the results for section B, so for this company, Palestine Limited has a healthy cash flow. As you see, January positive figure, February positive figure, March positive figure, and the cash flow is growing. So the decision to fund the machine was a good decision, because as you see, funding the machine and taking the loan didn't affect really on them a lot. So yeah, they look really healthy company, healthy cash flow. So yeah, that's all from me. So yeah, so remember something, the advantages of a cash budget, that is very important, that the business can identify if there is a shortage ahead of time, so they can take action to avoid any type of interest or any type of damaged reputation to the business. Okay guys, that's from me. Thank you very much. God bless.